A war started in the Middle East, and within 48 hours, your investments moved. Your fuel prices shifted. The stock market swung hundreds of points in a single day. Most people watched it happen and had no idea why. They just knew something felt unstable. Here is the truth that nobody is explaining clearly. A conflict thousands of miles away is directly connected to the money in your bank account, to the price you pay at the pump, to whether your grocery bill goes up this month. And once you understand how that connection works, you will never look at world news the same way again. Oil controls everything. It all starts with one thing: oil. Oil is not just fuel. It is the foundation of the entire global economy. Everything you buy, food, clothes, electronics, medicine, required oil to be produced, packaged, and shipped to you. When oil prices rise, the cost of everything rises with it. That is not a theory. That is how supply chains work. Now here is why the Middle East matters so much specifically. A critical passage called the Strait of Hormuz runs through that region. Nearly 1/5 of all the world's oil supply passes through that single narrow waterway every single day. When there is conflict in that area, when ships cannot pass safely, or when the threat of disruption grows, oil markets panic instantly. Prices spike, and the entire global economy feels it within days. That is exactly what happened this week. The US-Iran conflict sent oil prices surging and markets into turmoil almost immediately. What happened to your money this week? So let us talk about what this actually did to ordinary people's finances in the last 48 hours. Stock markets fell sharply as investors grew fearful. Uncertainty causes selling, and selling causes portfolios, including retirement accounts, to drop in value. Energy stocks surged nearly 34% since the conflict began, because higher oil prices mean higher profits for energy companies. That is good if you own them. Bad if you do not. The dollar strengthened initially as investors sought safety, but that hurt emerging markets and international investments. And then, a ceasefire was announced. And within hours, the S&P 500 jumped 2.5%. Oil prices dropped. Bitcoin topped $71,000. Markets exhaled. All of that in less than 2 days. This is what geopolitical risk looks like in real time. And most people had no idea it was coming. What smart investors do in moments like this? So what is the right response when a war breaks out and markets go haywire? First, do not panic sell. The people who sold at the bottom of this week's drop locked in real losses. The people who held are already recovering as the ceasefire took hold. Second, understand that these events are temporary shocks, not permanent changes. Unless the conflict escalates into something much larger, oil prices and markets tend to normalize within weeks. Third, if you are not diversified, this is your wake-up call. Portfolios that only hold growth stocks get crushed by geopolitical shocks. Energy, commodities, and defensive stocks act as a cushion exactly in moments like this. Fourth, watch oil prices as your early warning system. Before markets react, oil moves first. If you see oil spiking without an obvious reason, something is happening somewhere in the world that will affect your money soon. The world is more connected than most people realize. A conflict in the Middle East is not just a news story. It is a financial event that reaches into your fuel tank, your shopping cart, and your investment account. The people who understand these connections do not get caught off guard. They see what is happening. They stay calm. They make decisions based on logic instead of panic. And that single difference between reacting and understanding is worth more than any single investment you will ever make. Stay sharp, stay informed, and see you in the next one.